Welcome to our fireside chat with Mr. Rule himself and Maria Smirnova, who's the Chief Investment Officer over at Sprott. Looking forward to having this conversation today. So let's start with just the overall outlook on the gold, silver, precious metals market for this year. So we can go ahead and start with you, Rick.
I was afraid you were going to do that. Overall outlook. I believe that we are in a real sustainable gold bull market. Having said that, it wouldn't surprise me if gold right now in the near term is substantially ahead of itself. My thesis around gold is fairly well known. I believe that the US dollar loses 75% of its purchasing power over the next 10 years, roughly analogous to what happened to the US dollar in the decade of the 1970s. I believe that gold is likely, although not certain, to retain its purchasing power, which suggests that over 10 years, the fall in purchasing power of the dollar will be mirrored by a rise in the nominal price of gold. That was the same thesis that I laid out here at VRIC at the beginning of 2025. I didn't anticipate the rather rapid lurch in gold prices that I think most of us have enjoyed. I think my thesis is intact. But it wouldn't surprise me if in the very near term, gold is overbought. My experience has been, over time, that in precious metals bull markets, when the narrative has been validated by price movements in gold and the generalist investor comes into the space, that leadership changes from gold to silver. I think we saw that 3 months ago, but Maria knows more about silver than I ever will, so she can handle that. My own response to that was that last week, I sold most of my physical silver. That doesn't mean it won't go up. What it means is that it exceeded every level of greed I had in the short term. Given that it enjoyed a speculative part of my portfolio, my reason to own it disappeared. So it disappeared. Okay?
Maria, what's your outlook on the gold, silver, precious metals market for this year?
For this year, you want me to be short term?
Look,
I'm not going to be short term, and we don't make predictions for the price. What I will say is that we have been bullish gold and silver for a very long time. I've been at Sprott for 20 years, and for as long as I remember, we've been bullish those things. And lo and behold, here we are. Silver is finally $100, and gold is what, 5,000 yet? So it's been a long time coming. Now, I agree with Rick. Nothing goes up in a straight line, and I think where corrections are actually healthy. We want a correction right now, especially in silver. I'd love to see a correction. Now, we're also, or at least me, I am bullish many different things. I am bullish copper, I'm bullish uranium. I think we're in a synchronized resource market right now. And so it's not just precious metals to me. We need many different things in the world to build, to electrify, to power. So that's where uranium, copper come in. Lithium will come in there. So I think as a resource investor, I'm a little more diversified, and I'm bullish various different things.
Okay, so many of the equities have moved. Obviously, silver up 200% last year, gold up 74%. Do you see any particular resources that are lagging right now that you all are interested in?
Well, I would say copper has a long way to go. It hasn't had the big move. So, if we put it relative to silver, for example, silver broke through $35 in June. That was a very big, for me, that was kind of a level we were watching. And again, it's tripled, right? Since June, almost tripled. Copper hasn't done that yet. So I think there's other things that can do that type of move for various reasons. And for me, copper and silver are in a similar boat where they are used in similar end uses. Again, electrification, electronics, solar for silver, obviously, and there's a deficit. Both copper and silver are in fundamental structural supply-demand deficits, and it's very hard to fix these deficits because supply is quite inelastic. Mining production has long lead times, as we all know, At the same time, demand is growing quickly, and so that's where you get that diversion, and that's where we get the shortages.
Okay. Rick, so you've been going around talking about oil and gas. I'm curious in what you think about copper. You think copper is in a good position, has a long way to go? Curious in your thoughts there.
I mean, first of all, the copper business has been really good to me over the years, and so I have fond memories. There are any number of big copper mines that make a couple $1,000,000 a day. Those are good mines. Meanwhile, despite the attractiveness of that metal, the world has been underinvesting in copper supply for at least 30 years. Underinvesting in exploration, underinvesting in production, underinvesting in sustaining capital. And we can't fix that. I was recently at a conference in London, and Wood Mackenzie, having surveyed the biggest copper companies in the world, told us that the consensus opinion was that the copper industry required $250 billion in capital expenditures over the next 10 years to maintain current supplies, which, as Maria says, are in deficit, with copper demand growing at 2% compounded per annum.
Or faster.
Pardon me?
You could argue it's growing faster than that, but yeah.
That there's no way around it, except a synchronized global depression. The industry isn't going to be able to spend $250 billion because they have $100 billion over 10 years. And even a $250 billion expenditure maintains production that's already in a structural deficit with demand slated to increase at 2% compounded. Those are silly numbers. The other thing that people forget about copper, Maria doesn't, because like me, she's been around. Copper has extraordinary utility. If you are one of the people on Earth, as an example, that wants to buy a car, there's 600 pounds of copper in a car. Copper price goes up by $2 a pound, $3 a pound. It almost doesn't finish the change price of the finished price of the car. In the near term, copper demand is fairly inelastic to price. Over time, sure, fabrication technologies get better, you substitute, stuff like that. But in the near term, there's absolutely no way that you accommodate a $250 billion expenditure necessary to maintain a current deficit when supply increases. Let me give you one more thing. Maria's Canadian, so she's too polite to ever say this. But globally, the amount of theft by government increases annually. The amount of money that governments steal by way of tax, by way of royalty, by way of required off-concession infrastructure. And this means that the return on capital employed in the copper industry goes down. At the same time, despite Orange Julius, south of the border, the regulatory constraints don't seem to be easing that much in the copper business. Resolution is a wonderful copper deposit in the United States. 1.2 billion tons, 1.5% copper, average mine grade world about a half a point. Check this out. This mine has been in the permitting stage for 28 years. There's a couple folks in this audience that weren't born when that permitting process started. So my suspicion is, with regards to copper, that Maria is absolutely right, that a copper market is inevitable. It may not be imminent, but it's inevitable.
Thank you for sharing that. So to piggyback on that, so recently President Trump was at Davos, and he mentioned that the AI grid, like the grids need to be updated, and that we need to cut permitting timelines and such. So I'm kind of curious in your forecast on, is policy, do you see shifts in policy that is going to help, these timelines, proceed quicker or whatnot? Just curious in your perspective on the policy nature, because these mines have to get permitted for us to get the production that we need. And so you want to share anything to that, Maria?
Well, I think any changes in policy and fast-tracking permitting is actually very welcome by the industry. I would argue that if it's hard to permit a mine, it's harder to find a good mine. And finding it from, staking it to drilling it, etc., is a 20-year process potentially. So that is also the bottleneck. So even if we have faster permitting, which would be again fantastic in my mind, we still have a long process otherwise to build a mine. And we don't have, the other thing is, I would say, the quality of the mines versus 20, 30, 40 years ago has gone down. If you look at average grades of various mines, and this is happening everywhere, this is happening in gold and silver and copper, grades are going down. In the past, if a gold copper mine was 2% for an open pit, we would consider 0.4, 0.5% a grade copper mine right now. So there's other big factors that are making this business more difficult as time goes on.
Okay, so uranium and nuclear stocks have been performing significantly recently. And I'm just curious in your perspectives on the uranium market.
Me first? Many people in the audience know uranium's been really good to me. One of my slogans is I buy hate and I sell love. Uranium's not hated anymore. I think the good times may be ahead of us, but the idea that you're going to enjoy 4 or 5 year 7-baggers on the stock, that's probably not the right thing to look out for. What I really like about uranium, and I think Maria may share this with me, is that the dynamic of the market is changing from a spot market where lazy analysts like Maria and I never know 3 or 4 years from now how much uranium we'll be able to sell or at what price. These term markets specify price and terms, so I don't have to figure out anymore what the price is going to be. If I have a credit grade, an investment grade credit buying the uranium, unlike any other commodity in the world, in uranium, I know how much I'm going to sell and I know what it's going to sell for. This certainty will over time lower the cost of capital for uranium companies. The other thing it'll do is if you want to put a big mine in production, to put a big mine into production, the juniors couldn't get access to debt because there was too much uncertainty. They had to sell it. And mostly they had to sell it to a very small club of buyers. In Canada, they had to sell to Cameco. Now, you can't have an auction with one bidder, right? That doesn't work. Now, if they have offtake agreements with investment-grade utilities, they can take those offtake agreements to the bank and they can get credit that they never could. It may mean that they don't decide to sell the mine, but it does mean that they can say to Cameco or Rio or somebody else, if you don't pay us a fair price, we're going to build it ourselves. So that part's changed. But I really think in uranium, the easy money, and it was easy money, I mean truly easy money, the easy money's been made.
So I will admit I'm not a uranium expert. We do have products both on the physical side and the equity side in uranium. And our thesis on uranium stems from the fact that, we need clean energy. And for better or worse, uranium provides exactly that. It is a more controlled market, as Rick alluded to, in the sense that there is a lot of contracting of the price, so the price doesn't swing around. But I also think that there's a bigger shortage in uranium juniors. There's a big shortage of quality stories. So if you find a story you like, I would say that that's a great opportunity because, again, we think uranium will do well going forward, and there's a shortage of good deposits.
Okay, so I do want to get your perspective on the rare earth story. Okay, this seems like the most political of them all. I mean, it's multiple metals. I mean, I think, there's multiple metals within that. But just curious in your thoughts there. So we had a big sell-off over the fall on news with China and a truce between the U.S. and China. So many of the stocks fell significantly, but now it seems that trade's back on, like the stocks have started to rally again. So just curious in your perspectives on the rare earth sector. We can start with you, Maria.
Oh, boy. Well, as you know, the rare earths are much controlled by China. So it's very difficult to kind of predict what's going to happen. And outside of China, there's an even bigger shortage of good deposits. So to be honest, I don't really have a view. I know we need them for electrification, for electric vehicles, all of that good stuff, but I really don't have a view.
Okay. How about you, Rick? I know you did a lot of homework on this when we chatted. I think it was last year sometime. You were going deep into the rare earths, and so just curious in your perspective.
I've spent 5 years studying rare earths now, and what I've learned is how little I know. Let's start with what I do know now. And I'm embarrassed to say it took me 5 years to learn what I do know, which is not much. First of all, they're not rare. Rare earths are not rare. We didn't find them because we didn't look for them. And the reason we didn't look for them is because the Chinese produced them so efficiently. All of a sudden, we've politicized rare earths. The United States weaponized the US dollar, so the Chinese decided to weaponize heavy rare earths, tit for tat, so to speak. The response to that is my president, wonderful portfolio manager that he is, decided to invest my tax dollars in Mountain Pass, a mine that's been bankrupt 3 times in my life. I think there are opportunities in rare earths because I think the fact that we haven't looked for them and the fact that we are looking for them now means that we're going to find them. And we're going to find them in a circumstance where the government, forsaking their normal role as villains, are going to be stupid enough to subsidize us. For most of my career in extractive industries, I have expected as a consequence of my government to find my picture on the post office wall. They vilified me for 30 years. Now these same morons want to subsidize me. I have to say personally, I felt cleaner when they were vilifying me than I do when they subsidize me. But as an investor, if you've already invested, there's nothing in the world that you want to see come onto the register as much as dumb money. Dumb money, easy money, cheap money. And history has proven that there is no money dumber than the taxpayer. And the taxpayer is coming to the rare earths market full speed. Well, as a taxpayer, I resent that. As somebody who is going to be the recipient of massive quantities of dumb money, I appreciate it. You need to be very careful in rare earths. There are a lot of promoters who failed at gold, and then they failed at marijuana, and then they failed at cryptocurrencies, and I don't know what was hot. They're about to fail in AI. The fact that they're in it means it's artificial idiocy. And these guys are going to come into rare earths where they're going to fail too. So it's important that when you listen to the rare earths story, that you go into that story with some people who cut their chops on rare earths before it was fashionable. By the way, that does not include Rick Rule. I've spent 5 years working really hard, and I'm truly amazed at how little I know. There will be a lot of money to be made, but a lot more will be lost.
So you're not starting a rare earths company in Greenland, I take it?
I put 2 deposits there.
Okay. Well, any final thoughts for the audience before we wrap up?
I'm very excited about what's going on in the world in the sense that, I mean, there's many bad things going on, but at the same time, the world's recognition of the fact that we need all these resources, all the metals to live and to prosper, I think there's a change happening. Mining is going to become more accepted, I hope, with all these changes happening. So for everyone who is investing in the mining sector, I would say, believing it is one thing, but still do your due diligence. And I've heard a great talk from Brent Cook. I know there's lots of great talks at this conference. Remember the important parts, that people are important, location is important, and do your work. And I think in this market, you can make a lot of money.
Absolutely do the work. For those of you, by the way, who don't know Maria, she's not like me. She's not all over social media. This woman, for those of you who don't know, was and is, I think, Eric Sprott's primary analyst. So she cut her chops with the single most sophisticated resource speculator I ever met in my life. So when she says things, pay attention. On the other side of me, I got a guy who, when I first met him, I think he was a parole officer, a probation officer. 7 years ago, if he would have come through here, it would have been to take some of the exhibitors away in handcuffs, And this he's done a spectacular job getting up to speed. Today he's had to be Daryl Thomas and Jay Martin. So particular, I'd like a big round of applause for my friend Daryl Thomas.
Thank you all.